Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 12th of January. All right, now the dollar largely unchanged, right? A little bit of a knee-jerk, strong dollar reaction to the US inflation numbers, which came in slightly better than expected. But the market is still pricing in a March rate cut by the Fed, right? So the move and the opportunities last night, you're probably smart if you just sort of sat out of it. But a little bit of a gyration, but things haven't really moved. As I said, the dollar sort of went up sort of short term, and several hours later, it's come back and stalled. So most of the trading instruments have not really got the answer as to where they are going to next, right? That's the sort of key to it. So it's a question mark across the board. Is this good trading conditions? Well, not really, but you can see the pressure building across the board, right? And that is good for us because the littlest sort of shift in, say, US data or even other economic data out of, say, the UK, Europe, Australia, New Zealand, Canada, Switzerland may sort of trigger a move because the pressure is building across the technicals. And if we have a look sort of just on the, the global markets themselves, is there much going on? Well, slight sort of risk off as far as the equity markets, not a big move. We're not seeing that reflected in the currency markets. Okay, to me, the markets aren't really sort of doing a hell of a lot. If anything, the US Treasury prices are down. Yields up slightly, but they're a long way from the highs we saw sort of November, early December, right? So the yields, well, I just don't think we've got any sort of clear activity just at the moment. Markets expecting rate cuts from the Fed, US CPI numbers, well, they really just didn't deliver for us. So there's not much you can do at this point except sit back, wait, have a look what sort of economic numbers are doing, but you can't make these instruments move, right? So just relax. This is really like the first week of the year as far as sort of trading goes. We've seen a bit of a lackluster, like not probably maximum liquidity at this stage. So we'll see how that plays out as we go forward. The only thing you can really do is start to scroll through next week's economic numbers and start sort of piecing together a bit of a plan of attack for what is going to move. Obviously, sterling's going to be in play with the employment numbers. You got the ZEW numbers out of Europe, Canadian inflation numbers, and that's probably the sort of pick of the bunch at this point. So anyway, lots to play for at this stage. I can't really tell you too much else except just follow the trail. The dollar here is pretty much mixed against the board. Tells me not too much is going on. If anything, in the Asia session, the Aussie's up, Swissy is down. Okay, the general sort of safe havens, bit of a mixed reaction there on sterling. So anyway, not much to sort of have me waffling on too much about. Just take it easy, wait for the pressure to build on the technical side of things, which they are. That's a good thing. That's something to look forward to. So don't lose your marbles just yet. We've got plenty to play for. All right, guys, have a good one. Have a good weekend. Cheerio.